Okay, delighted to welcome everyone to this special podcast episode. I'll go around and just ask you all to introduce yourselves, please, and the companies you work with. So we'll just start with Zachary, please. Just introduce yourself.
Zachary Tombley. I am the founding member of Black Swan Ventures, which is now Black Swan Holdings, and just acquired Lyric.
And Daniel as well, please introduce
Sure,
yourself.
yeah. So I'm Daniel Sodroski. I'm a managing partner of Black Swan Holdings and work with Zach.
And Andrew as well, please introduce yourself for those of us who don't know you, and there's probably not too many in the space, but introduce yourself and Wheelhouse, Lyric, your background as well.
Sure. My name is Andrew. I've been Andrew Kitchell. I've been building short-term rental businesses for about 9 or 10 years now, both in the technology and operations space. On the technology side, I founded Beyond Pricing and Wheelhouse, both pricing intelligence and revenue management companies. And then I was lucky to be the first builder of Lyric, which is a hospitality brand focused on creating amazing experiences. Lyric was initially targeted at corporate travelers and creating these spaces in urban environments. And that may or may not be the future, as we're going to learn today from Zach and Daniel.
Fantastic. Thank you, thank you, Andrew, and to everyone here for sparing a bit of time for us today. So, of course, many of our readers will have seen the news about Black Swan now deciding to acquire and revive the Lyric brand and model. So, between you, Daniel and Zachary, could you just please just introduce exactly who Black Swan are and why you've taken the decision to acquire Lyric?
So Black Swan is a short-term rental operator. We've been around since about 2015, kind of in the dark, on stealth mode, if you will, operating, focusing kind of on the product experience and technology solutions to kind of support that. And jumping to the Lyric component, I think the big reason that Lyric was attracted to us as an acquisition was the fact that most consumers make their decisions based off brand, or make a lot of their spending decisions are influenced by brand. And when we look at the space, we don't really see a good hard brand consistency, and brand product. So to kind of complement the rest of our business, which is focused now on real estate acquisition, we saw Lyric as a really strong opportunity to kind of enhance that growth strategy and complement the real estate acquisition.
And Daniel as well, you've got a background in real estate before Black Swan and Lyric. So yeah, again, like piggybacking on what Zachary said, why was the time to revive Lyric?
Yeah, so I'm a real estate attorney by trade. So I practiced in private practice for about 5 years before joining Domio, which I'm sure you're super familiar with, was one of the big four STR companies, along with Lyric and Sodroski, the Alfred back in the day. We went as far as we could with the tools that we had and the strategies that were being implemented at the time. But I think we all kind of saw how that resulted and what happened to some of these companies. Sodroski was fortunate enough to IPO and kind of dig themselves somewhat past that really challenging part of COVID. Andrew here saw an opportunity to quickly switch back to what he knew was the right thing for him and his investors, and kind of put Lyric on the shelf, the brand itself on the shelf. And when I was busy winding up the Domio assets, that's when I met Zach, and he was showing me what they were doing at Black Swan, and I was like, this is how companies like this should be operating. How's there a way I can get involved in there? And that's when he offered to bring me on as a partner of his, and we kind of took it the next step and started investing in real estate and becoming fully integrated with our operations company and the property company. And then that's when we started having more advanced conversations with Andrew and his team about what was going on with Lyric and how we kind of saw that complement the existing Black Swan product, but also with, as Zach mentioned, the real estate acquisition strategy, and really kind of bringing that into the fold as like the last component of our business.
Thank you, Daniel. And Andrew, when it came to this acquisition, was this always something that you you were planning to do when you span out of Lyric into Wheelhouse?
Well, it was a pretty crazy time when we were in many ways putting Lyric, to use Daniel's words, on the shelf, but kind of forced to the shelf by COVID, right? When COVID hit, we had 25 buildings across 14 urban markets focused on corporate travelers. That was a rough place to be when occupancy dropped to 8% and we had lease exposure everywhere. So step one was, we have no idea what the world is going to look like post-COVID. Our team's decision was the thing that we knew at the lowest cost structure / highest upside in any hospitality return was actually our software product, Wheelhouse, which is what we pivoted to, and our team knew well, and we believe we could keep building again under the many shapes that hospitality could potentially, or accommodations could potentially return to. I will say, I think, and Zachary and Daniel, we might want to dive in a little more here. I mean, I loved building Lyric. It was super fun. And when we were offloading buildings, we were looking for great partners to step in to take over, in many cases, great assets, really well designed, really well appointed. Our team had invested no small amount of capital and time in creating the Lyric brand. And there are a few parts of it that I still think are magic, and I'm super excited to see this team now build on. But it's a 5-letter domain speaking to, I mean, how many different ways can you use the word Lyric in an interesting way, right? So we thought we had the bones, the structure for creating an iconic brand in a space that lacks an iconic brand. I still believe that is the case. I do believe this team will build that brand. But yeah, the decision to shelve Lyric initially was, well, we have no idea what's going to work. Operation, like, we can't sustain the business model in 8% occupancy. And we then did, about a year later, start to think, hey, we've got something interesting here. I'm not sure we're the right team to build it again, but let's go talk to folks who can. And that was kind of a collective conversation that Zachary and Daniel, maybe you want to share a little bit about what you learned about Lyric as you dove in.
Yeah, I think, having done this, not quite as long as Andrew, but, within the general same time frame, I think we've all seen how the product has changed, and really how the consumer demand and consumer interest in the products changed with it. Arguably, when we all started, it was just take what you could get, throw it up on Airbnb and see what happens. And then over time, particularly around 2018, I think you saw brands like Lyric, I think, was arguably the leader in that space, but Sonder, Stay Alfred, Domio, maybe slightly later than those guys, but all kind of push forward in the brand, on a brand forward strategy and kind of defining the asset class and defining the product. I think when we took over Lyric DC, we really had the opportunity to initially see what behind the scenes, what they actually had created, and a lot of the little parts, the collateral that goes along with it, not just, oh great, you put wallpaper up, but also, how did you take these photos? How did you decide that this was going to go here versus here, and kind of thought process behind it. And that really, like, light bulb in my head of just the intentionality that they spent, particularly with just really on, like, the little things that I would argue the space is largely just forgotten at this point, or hasn't gotten to yet. So it kind of looked like this dichotomy of, like, wow, they were over here really building something that a lot of us probably didn't understand fully. If you stayed at a Lyric, you surely knew what that experience felt like and what it was, but I don't think you realized the intentionality when the space was largely just throwing it together as quickly as possible. So that was when we first were introduced to that concept, and that kind of just difference in the brand, what we were doing. Even though we were trying to be very intentional, we didn't have the experience and expertise in hospitality in general to know what that meant. So fast forward, we had the conversation, we kept the conversation going, but really when we started to really fully grasp, which is ironic that it took this long, what there was, and the fact that this wasn't the brand was not built by no offense, but tech bros, right? It was built by really Ravi, Ravi at the helm, by real hospitality guys that really understand what that means. And that's why that intentionality was evident then. Like, we didn't know it then, but now retroactively looking back, you go, okay, that's why. Because you had a guy, and a team of people that really understood those facets and knew a lot more, had a lot more experience than even people that maybe have been doing this quite a long time, like myself, and Andrew, and obviously Andrew led that team ultimately, but you had these guys that really understood hospitality. So that's when we really got into it and got to dig around and see all the collateral. The domain's great. Obviously the branding's amazing, but there's a lot behind the scenes that people still haven't seen. And I firmly believe that should COVID not happened and the interest rate environment continued as it was in 2019, surely there have been some bumps in the road, but Lyric likely would have become the predominant and the leader, at least the thought leader in the space, and surely the leader on ADR and RevPAR, because it was working from the ground up on the foundation and then scaling alongside it. So that's really, when you really get down to it, that's what made us kind of go, okay, we need to dig in, as we kept seeing more and more. And then you add into the fact that just like the way the consumer was interacting with that brand, things like 86 NPS score, which is quite high. But also things, getting to like the analytics on the web page, like the vast majority of the people that visit that website and did visit that website were organic. And I've seen some of the other failed companies, web analytics as well, and that's not the case. They were spending tons and tons of money. So you have these just aspects, you can just tell the consumer really, really wants to engage with Lyric and really was engaging with Lyric and wanted to continue to do so. And even post announcing the acquisition, the amount of people that have reached out both as consumers and as previous employees is I don't think I have ever seen like this. It's almost overwhelming. It's great. We want more to reach out with us, but everyone loved working there. Everyone wants to see it come back. And it just shows you how much the emotional connection to that brand and to that experience, which fundamentally is one of the most important aspects of a brand, is that there's an emotional connection.
That's great insight, Zachary, there, and kind of building on what you're saying, Daniel. What do you think? What does this acquisition mean for the future of maybe not only short-term rental landscape, but also the wider hospitality real estate industry as well?
Yeah, so I mean, Zach mentioned a lot of things about the brand. I think substantively in terms of like how much time and energy and thought was put into the really important things, and the domain name is super important. Brand recognition, consumer recognition, all that stuff is important. Since Black Swan is real estate focused first, we are only interested in acquiring, developing, and repositioning trophy assets to convert into Lyrics. We're not willing to compromise on that business strategy. And so since our real estate strategy will propel the brand development and the brand proliferation, I thought it was super interesting and super important from a real estate perspective that the Lyric brand was probably one of the only brands to not just raise money from VC companies like a lot of the people in our industry do, but from actually like real estate investors. I mean, if you look at like Barry Sternlicht invested in Lyric, he's one of the largest hoteliers in the world. You had RXR, you had Tishman, you had real estate people investing in, at the time people were calling them prop tech or tech companies, but companies that were real estate focused with tech adjacent funds and investment vehicles, right? So for us, I think that was super important because while we want to, we do want to continue to raise money, we want to raise money from people who understand the real estate metrics and returns that you would expect from a real estate investment, right? And so, so that's the one facet. The other facet is, having access to thought leaders in that space, pipeline, the whole 9 yards. Like that's super important for, I think, building this new asset class, which is a hybrid between residential and hospitality. We firmly believe that Lyric can be one of the premier luxury branded type residences that you're now seeing pop up all over the country, like the St. Regis, the Four Seasons, and have that Lyric experience both from a long-term perspective as a multifamily product, but also in the hospitality. And and kind of see how the Black Swan team has unlocked, those additional yields and cash flow for investors, but also for building owners and for people in our space.
I might add.
Oh no, please.
I was going to say I might also add something that it's brand related and kind of. But speaking to this, we've had conversations under the Black Swan, moniker with some of these bigger groups as well. And one of the issues that I think is in the space in general, but particularly with the larger operators in the space, is when you say and I won't say names, but when you say that that Google or that Uber or whatever, use the nomenclature that's become derived, whatever that product is or that service is, it's very difficult in our space to say one of our competitors and know what that product means. And even to arguably Black Swan. The thing that Lyric did really, really well is people knew what a Lyric was. Even if they hadn't stayed there, they knew what a Lyric was. You just look at the photos, you could tell the consistency, the location was chosen. Again, this goes back to intentionality, behind the scenes stuff. And when you're working with these larger operators, particularly, or these larger real estate operators, and particularly the hospitality operators as well, they want to see brand standard decks. They want to see building standard decks. They want to know, okay, what is this? They're used to seeing it. They know what it looks like. So when you say, hey, I want to build this thing, it's very difficult if that thing isn't actually a thing, if it's just an idea, right? And Lyric was a thing. It is a thing, right? So when we say, hey, we want to build a Lyric, we're going to go do Lyric Denver. And it's like, people get it. We can show them what that is. We can show, okay, I want to know exactly what that looks like. Okay, this is what it looks like. And so there's a vision, but also there's a ton of collateral to back it up. And there was consistency on their part on Lyric 1.0 on really focusing on, okay, what does that look like? What is it, how's this definable? So people actually can relate to that thing. And you think that mainly because it's customer driven, but it is very, very helpful in the real estate conversations as well.
Fantastic. And Andrew, from your perspective as well, what do you think you've learned since your time at Lyric and then pivoting to building Wheelhouse?
Well, I'll speak about building Lyric was really fun. I mean, it's amazing to build a physical product that people walk into and then they write you and they say, hey, we had this amazing stay. I actually think Zachary and Daniel have already hit on a couple of the key points. Some things I would say we were learning when COVID hit. So for example, we had, when I mentioned that Lyric had scaled to 25 buildings in a couple of years, building a brand from the ground up. That's a way to build a hospitality company. That's a way to do it. It turns out a better way to do it is to move a little more patiently. And my favorite story around this is when Virgin Hotels launched and wanted to have 10 hotels at the end of 10 years, their MO was, we're going to build one and run it for 8 years and perfect everything and then build the next 9 over the last 2 years. I think building an iconic hospitality brand takes time. And the reason real estate investors are the right backers for the category is, one, the return profiles of what Zach and Daniel are going to achieve looks more like a real estate company, real estate returns. And two is, Zachary and Daniel, to their credit, built in a patient, thoughtful manner that has enabled them to execute really well. And now they can scale that. So I would say what I learned during Lyric first was that hospitality is hard. You should scale slowly and you should scale with the right capital. Those are the obvious lessons. Since leaving Lyric, I think the thing that really came to be scary to me was lease exposure. And to get through the lease exposure phase of the business, so where you needed to sign a lease to take on assets and do kind of what's known as lease arbitrage. To do that, you needed a really iconic brand. You needed a long operating history to be able to convince building owners to partner with you. And again, to do that really well, it's almost better to focus on nailing execution on a small set of properties before taking it worldwide. I still believe what I believed at Lyric, which is the great winner of the category. The team that will build a true iconic next hospitality company is going to have an excellent brand that draws consumers to a particular location. is going to be operationally excellent to support that brand, because you can make a brand promise, but if you can't operationally support it, who cares? And is going to leverage technology in a way that allows them to have a differentiated operational cost or customer acquisition cost than a traditional hotel company. That is the needle someone will need to thread to build the next iconic company. And it will happen. It will happen. I think we're looking at probably the best shot at it. So yeah, I think lots of learnings, but I remain incredibly bullish about the team, the category, and the brand.
Thank you, Andrew. I mean, Zachary, Andrew said a lot of really interesting and impactful statements there, and he's also sung your praises as well in building up Lyric. So, you're talking there about building, somewhat slowly on scale, and talking about the right capital coming into businesses. What do you see, Zachary, as your vision now for building a new Lyric?
Yeah, so one of the things that I think, Andrew and I both would agree with, and he obviously just spoke to, is capitalization segmentation, where you have the right capital and the right vertical, right? So funding real estate with venture capital is like, they're antithetical, as we all have seen with WeWork and many other companies that have dabbled in this space. It's a different beast. Real estate's very slow. You can go quick, but if you go quick, you need to really, like you said, have your ducks in a row. Execution is key. Things get out of hand really quickly. So I think that's one of the things is really aligning the capital well with whatever that particular vertical is. The way we see it, there's 3 verticals, and they're all integrated, obviously, but the real estate arm, the operations arm, and the brand. So we wouldn't want to align the capital poorly with any one of those. So that's one thing I think going forward. The other thing that we're very keen on is looking at and we've done this for some years, but I think even more so now with the professionalization of the category, really looking to the hotel space and going, what have they done really, really well? And there are a lot of things, obviously building brand standard decks and things like that we know are great, are super helpful. But also just on how they've actually set up acquired properties and how that's broken up within its respective categories. It's very common for there to be an owner that builds a property to hire a third-party manager that then uses a licensing agreement from big brand, and surely that's where the space will end up eventually. We're obviously playing with a few different components, and we have every single one of those, but we're obviously reshuffling on each profit. Every deal's different, right? These are big deals. So they don't just get done. Like, you can't just be like, I want that property, let's do it. It's a lot of work, a lot of different partners. When you're buying $80 to $140 million buildings, it gets difficult to just try to apply the same formula each time. So I think that's the second aspect of it. And then thirdly, I think just in the future, one thing that we have the opportunity to do, and I loved all the lyrics there were, but surely there were some that even the team did because of the pressure to grow very quickly. And I think one thing we're very excited about is being much more uncompromising on what Lyric is and what the brand will be. And that's just a product of both the times, the acceleration of the growth. The STR industry has changed dramatically over 34 years. It's kind of actually wild when you think about it. And then, also the fact that Black Swan has some of these other things figured out and isn't funded by, any particular source that would push it to grow too quickly. So, we want to be very diligent. We do anticipate a little bit more of a version of strategy where, we have figured out Black Swan focus again, first on really what is the product? What does that mean? Was it homes? And we did do homes originally. Was it apartments? What kind of apartments? Like what kind of unit matrix do we like? Things of that nature. And really what is the product offering on top of that? And then, we, over the last 3 years before acquiring Lyric, which really was the intent, and setting up a real estate arm, we really wanted to focus on what is the tech stack that actually supports this. And so now with those things out of the way, we will very much be focusing on both, again, furthering the real estate strategy, which Dan can speak to a bit more, but also on reconstituting Lyric and what that means. We've already spent a decent amount of time understanding the parts that work still and the parts that don't. But this is a very, very, very fluid economy and very, very fluid capital market. So what we do is, in that respect, is still somewhat amorphous. But generally speaking, we want to get the Lyric brand back out there for people to interact with, engage with, and I think you'll see it pop up in places that would be very true to the brand. So yeah.
Thanks, Zachary. And I'm fascinated by the move into the hotel space as well. So I'll direct my last question to Daniel before we finish, and it really focuses on, hopping on what Zachary said there. What opportunities and/or challenges do you expect to encounter by building this new iteration of Lyric?
Yeah, so I mean, again, because we're real estate driven, and we're uncompromising, we're pretty flexible in the type of opportunities that we need to be looking at and be executing on. As far as the challenges are concerned, in today's economy, in today's market, it's going to be debt, right? And securing, financing for these projects. But I think also we're building a new asset class. We're not building hotels, and we're not building strict multifamily product. We're merging the two. And so getting equity comfortable with that concept, I think, is not necessarily a challenge, but it's something that needs to be overcome. And I think when Andrew and the Domios and the Sodrs were master leasing real estate back in 2018, 2019, that was a super easy business model to convince a building owner on. Now it's a little different because you need to raise either co-GP and/or LP equity to acquire these projects and convince them this is the model that we should be executing on. You have all of the upside of a hotel because you have your hotel component, but the downside of a multifamily product, in the worst case scenario, we can pivot some or a portion of the building back to multifamily and get more consistent returns to get us past this recession or financing hurdle or what have you. So we're seeing a lot of interest in this model because of where real estate is right now. The equity is just thinking about things much differently. There's a lot of opportunity, and so there's more. I think they're not willing to. There's no need to grow at this point and to make risky investments. So I think when you're looking at our product, you kind of have the best of both worlds, where you have this downside protection, but all the upside that you would normally have in this space. And then when you overlay the Lyric brand on top of that, I think that's where things start really getting interesting.
Thank you, Daniel, and a big thank you to everyone on this panel for joining us today. Really looking forward to seeing what the future holds for Lyric and indeed Wheelhouse too.
Awesome. Thanks so much.